Buying a home is one of the biggest financial decisions you'll ever make. But let's be honest, it doesn't always go smoothly. Hi, I'm April D'Amico, a mortgage broker with Layton Mortgage. In this video, I'm breaking down the top mortgage challenges buyers face and, more importantly, how you can overcome them. Whether it's your credit score, your down payment, student loans, or even losing out in bidding wars, I'm going to give you real answers so you don't feel stuck. Make sure to like this video, subscribe to my channel, and drop your questions in the comments. The number one concern I hear from future homeowners is this: my credit score isn't high enough. Well, credit scores vary from about 500 to 899, 500 being the lowest. There are options out there for you. Conventional loans often look for a 620 credit score. FHA starts at 580, and VA or USDA loans can go even lower in certain situations. And boosting your score doesn't take years. Sometimes small changes, like paying down your credit card balances under 30% of your limit or fixing an error on your credit report, can move the needle quickly. One of my clients was able to increase their score by 40 months in just 2 months and was able to qualify for a better interest rate. So if credit has you worried, don't count yourself out yet. Now, even if your credit is in great shape, the next big challenge is the down payment. You've probably heard that you need 20% to buy a house. That's one of the biggest myths in real estate. Here's the reality. FHA only requires 3.5% down. Conventional loans can be as low as 3%. And if you qualify for VA or USDA, you can buy with zero down. To put that into perspective, on a $300,000 home, 20% down is $60,000. But with a 3% down conventional loan, it's only $9,000. That's huge. And on top of that, there are different payment assistance programs available in many areas to help you get started with even less down. So don't let the myth of needing 20% down keep you from exploring your options. All right, let's talk about my self-employed friends. If you own your own business, you've probably heard that it's harder to get a mortgage. And it's true that lenders look closely at tax returns. But here's the catch: the more expenses you write off, the lower your qualifying income looks. But that doesn't mean you're stuck. There are programs designed for entrepreneurs, like bank statement loans, where we review 12 to 24 months of deposits, or profit and loss statement loans that can give you more flexibility. For example, I recently worked with a small business owner who was denied by one lender because of all of the tax write-offs. We switched to a bank statement loan and he was approved for the home he wanted. So yes, being self-employed is different, but it doesn't have to hold you back. Another big challenge that we're all seeing is higher interest rates. Yes, rates are higher than they were a couple of years ago, but that doesn't mean you have to put your dreams on hold. Here are some strategies. You can use a 2-to-1 buy down, which temporarily lowers your interest rate for the first 2 years. Adjustable rate mortgages can be a good option if you don't plan to stay in the home long term. And remember the phrase, marry the house, date the rates. You can always refinance when rates drop. To give you an idea, a 2-to-1 buy down on a $300,000 mortgage could save you around $400 a month in the first year alone. So instead of waiting for the perfect rate, it's about using the right strategy for your situation. Now, let's talk about another huge challenge: student loans. So many people think that student loans disqualifies them from buying a home, but that's not the case. Here's how it works. FHA loans typically count 0.5% of your loan balance if there's no payment listed on your credit report. Conventional loans usually go by the actual payment you're making. And if you're on an income-driven repayment plan, you can work that in your favor too. I've had clients with over $100,000 in student debt who were still able to qualify because their income-based repayment plan lowered their monthly obligation. So if student loans is holding you back, there are always ways to work around them. All right, let's say you've handled credit, down payment, income, and debt. The final challenge: competition. In today's market, multiple offers are common, and sometimes your financing is what makes or breaks the deal. Here's what helps: getting a true pre-approval, not just a pre-qualification. Working with a lender who can close in 2 weeks or less, like me, and having your lender personally call the listing agent to reassure them that the deal is solid. I've had clients win homes even when they weren't the highest offer, simply because the seller felt confident that the financing was strong. So the right mortgage strategy can help you stand out in a bidding war. So let's recap. Our main mortgage challenges are credit scores, down payment, self-employment, higher rates, student loans, and competition. All of these are real, but they're not deal breakers. There are solutions for every single one. If you found this video helpful, do me a favor, hit that like button so more people can see it. Subscribe to my channel. And if you're ready to explore your own options, my contact information is below. I'd love to help you find the right loan and get into your dream house. Thanks for watching. I'll see you in the next video.